This meeting is being recorded.
CapBay has transformed the way business financing is done. Using innovative technology, SMEs have benefited from high-impact financing that is inclusive, fast, and affordable.
CapBay is a Malaysian fintech specializing in providing supply chain finance. We help businesses to obtain smarter financing while allowing investors to participate in our high-quality financing deals. We are licensed by Securities Commissions to offer both Sharia-compliant and conventional financing. Over the years, we have actually established many partnerships with large corporates, top commercial banks, and some of the most prominent investors in Malaysia to offer our high-impact financing to support the economy.
The COVID-19 pandemic severely impacted many SMEs. CapBay was the lifeline that supported them by providing over 1 billion ringgit in financing. Through their platform, SMEs were able to apply for financing online that was fast and hassle-free. CapBay has made their mark in the industry through their inclusive and flexible financing solution. CapBay Finance Doctor on Call to help drive the supply of COVID kits, which is critical to prevent further spread while helping to ease the burden on the frontliners. In 2020, CapBay worked with the United Nations Capital Development Fund Financial Innovation Lab, supported by the MetLife Foundation through the I3 program. Their research highlighted that many lorry drivers had limited access to financing. In response, CapBay created an affordable and collateral-free financing product for them through its partnership with the lorry and their wide network of lorry drivers. Environmental issues are a key focus area for CapBay. They have financed a leading green energy solutions provider to improve the energy efficiency of commercial buildings. This helped reduce carbon dioxide emissions, making the environment sustainable for generations to come. Getting financing from CapBay is as easy as logging into your phone. Through their seamless platform, CapBay has the right financing solutions to help you, whichever stage your business is in. At CapBay, the products and services are tailored to meet all your financing, investing, and technological needs.
We started CapBay 5 years ago from my living room. In fact, the first deal we did was only 6,000 ringgit, funded by our own savings. Since then, the company has grown very rapidly with the onboarding of many talented individuals who are all very passionate about transforming the business financing industry. This has actually propelled us to become a leader in alternative financing space. Since we started, we have channeled billions of financing to businesses and making huge impact on the economy. Our mission is to build the financing infrastructure of tomorrow to provide smarter and more inclusive financing to businesses across Southeast Asia.
With thousands of satisfied clients, CapBay aims to revolutionize the financing industry through high-impact financing that is inclusive, fast, and affordable. CapBay. Business financing the smarter way. CapBay has transformed the way business financing is done. Using innovative technology, SMEs have benefited from high-impact financing that is inclusive, fast, and affordable.
CapBay is a Malaysian fintech specializing in providing supply chain finance. We help businesses to obtain smarter financing while allowing investors to participate in our high-quality financing deals. We are licensed by Securities Commissions to offer both Sharia-compliant and conventional financing. Over the years, we have actually established many partnerships with large corporates, top commercial banks, and some of the most prominent investors in Malaysia to offer our high-impact financing to support the economy.
The COVID-19 pandemic severely impacted many SMEs. CABE was the lifeline that supported them by providing over 1 billion ringgit in financing. Through their platform, SMEs were able to apply for financing online that was fast and hassle-free. CABE has made their mark in the industry through their inclusive and flexible financing solution. CABE Finance Doctor on Call to help drive the supply of COVID kits, which is critical to prevent further spread while helping to ease the burden on the frontliners. In 2020, CABE worked with the United Nations Capital Development Fund Financial Innovation Lab, supported by the MetLife Foundation through the I3 program. Their research highlighted that many lorry drivers had limited access to financing. In response, CABE created an affordable and collateral-free financing product for them through its partnership with the lorry and their wide network of lorry drivers. Environmental issues are a key focus area for CABE. They have financed a leading green energy solutions provider to improve the energy efficiency of commercial buildings. This helped reduce carbon dioxide emissions, making the environment sustainable for generations to come. Getting financing from CABE is as easy as logging into your phone. Through their seamless platform, CABE has the right financing solutions to help you, whichever stage your business is in. At CABE, the products and services are tailored to meet all your financing, investing, and technological needs.
We started CABE 5 years ago from my living room. In fact, the first deal we did was only 6,000 ringgit, funded by our own savings. Since then, the company has grown very rapidly with the onboarding of many talented individuals who are all very passionate about transforming the business financing industry. This has actually propelled us to become a leader in alternative financing space. Since we started, we have channeled billions of financing to businesses and making huge impact on the economy. Our mission is to build the financing infrastructure of tomorrow to provide smarter and more inclusive financing to businesses across Southeast Asia.
With thousands of satisfied clients, CABE aims to revolutionize the financing industry through high-impact financing that is inclusive, fast, and affordable. CABE, business financing the smarter way.
Hello, everybody. Welcome to this webinar organized by Wealthford in collaboration with CABE. So, good evening, everybody. My name is Shen Chu. I'm the moderator for this webinar. So, our webinar title today is Beyond Traditional Investment, Diversify Your Portfolio with P2P Investment Solutions. So, what exactly is P2P? That's what we're going to find out today. Now, if your portfolio is down, and you are feeling the pressure of the market volatility since earlier this year, then P2P investment could be an avenue to stabilize your portfolio return with steady income streams. And because it offers exposure that is not tied to the daily swings of the stock market. So today we're going to learn what is peer-to-peer financing and how it can help you to achieve your investment objective. So we are very honored to have two distinguished guests with us today from CABE to discuss about P2P investment. So they are respectively Mr. Darrell Ang, who is a co-founder of CABE, and also Ms. Easter Lee, who is the investment relationship manager of CABE. So before we begin, here's a disclaimer. Whatever we share in this session is only for educational purpose. So in no way they give you any recommendation to buy or invest in any products that we mentioned here. If you decide to make any investment decisions, you're solely responsible for all your investment risk. So it gives me great pleasure to introduce our first speaker today. Now, he has over 15 years of experience in finance with a diverse background ranging from being a fintech entrepreneur, investment banker, regulator, and management consultant. So, as co founder of CapBay, he has helped build one of the Southeast Asia's leading supply chain finance platforms, disbursing over $1 billion and supporting thousands of underserved SME across Malaysia, Singapore, Thailand, and China. So at CapBay, he has led the company's growth into a licensed P2P financing platform, forging strategic partnership with leading banks, corporates, and institutional investors. Under his leadership, CapBay has earned multiple international recognition, including CNBC and Statista's top 250 global fintech companies for 3 consecutive years, Fortune's FinTech Innovators Asia, and the Financial Times and Statista's High Growth Companies Asia Pacific. He was also named EY Malaysia's Emerging Entrepreneur of the Year. So he's none other than Mr. Daryl Ang. So Daryl, good evening. Good to see you here today.
Hi, good evening, Shane. Wow, that's a very great introduction. Yeah, looking forward to
Yeah,
this
you have
session.
wonderful profile, Daryl. Very uh, admirable. So I would like to you may take over the screen control, okay? And we can't wait to hear from you about what is P2P.
Yeah, sure. So I'm just sharing uh, my slides over. Hopefully you guys can see it now.
Yes, wonderful.
Okay, great. Yeah, so I just wanted to give a quick introduction about P2P investing, as well as some of the trends that we're seeing, especially taking a lot of the SC annual reports as reference. So I think one thing that's, I guess, a bit of like a misconception or something that may be new to people is that P2P has been around for many years, since all the way from 2017. I'll give a quick introduction about what P2P is about, some of the trends, and then I think later on, my colleague Easter will also run through a little bit more about the operations of how we run CatBay. And if you're interested, we can also see how we can also help onboard you guys also. So yeah, without further ado, this slide actually was before I noticed Shane actually did all the introduction, so I don't think I need to spend too much time here. But yeah, I think one thing that is quite interesting is that actually I've been looking at peer-to-peer lending all the way back from my university days in business school, like side business school. So back then, it's like very interesting because P2P was actually a game changer for the financing industry because this was back in global financial crisis 2018, 2018, sorry, 2008. So many years. 2008, where ultimately the global markets are kind of had a credit crunch. Banks aren't lending anymore. Interest rate dropped to close to 0%, and that also meant that investors aren't really getting good returns. So ultimately, P2P lending became kind of like killing two birds with one stone, where essentially SMEs can actually get access to financing, while investors or depositors can actually get more like better returns as compared to like the close to 0% rate. The other thing that I wanted to also touch on is where SMEs are actually, the ones that are actually benefiting from it. And I'm feeling a bit extra patriotic to this to do it tonight because in a few days' time there's like the Malaysian National Day. So ultimately, all the funding that the P2P investors can invest actually goes back to serving the whole Malaysian economy by helping the SMEs. We talk about SMEs a lot. So why is that? Why do we see this happening in Malaysia? It's not well, actually not just Malaysia, but across the world. Ultimately, MSMEs still form a very large proportion, where they make up more than 97% of Malaysian businesses, and interestingly, also contributing about like 40% of GDP in 2023. And it does expect to actually grow all the way up to like 50% by 2030. And I think this figure would probably be more interesting as well with the rise of AI, where actually you can have small businesses actually take over what large companies can do. So yes, the government actually has set quite a few key targets as well for the 30 Malaysian plan to actually accelerate the growth and competitiveness of SMEs. I think every budget that you've seen, the finance minister always talk about the SMEs and how they're contributing, as well as what the measures that the government can take. So one thing, moving to the right hand side. One thing that is commonly seen is that despite the growing needs or the growing use cases of SMEs, they still struggle to actually get financing from banks. Some of the top rejection reasons include it being not profitable for banks. So typically, banks would want to focus on their rice bowl where these are like 5-10 million ringgit in terms of credit line. So when it comes to like smaller transaction sizes, so basically the underserved or unserved SMEs, it's not really just right. Their processes are not really built for financing lower ticket sizes. One other thing is that banks typically adopt a very collateral-based financing. So you go to a bank, ask for a loan. The first thing they ask is like, oh, what property or what asset can you pledge for us to finance? So this is I guess, a very traditional way of running things. And the third thing is in terms of the third rejection reason is actually in terms of insufficient information. Um, so this is something that's quite interesting, especially for Cat Bay, where with data being the new oil, we actually utilize a lot of information, a lot of data that we actually connect directly with third parties or with data providers to actually assess um, these borrowers, or we call them issuers, on our platform, because now we are able to connect through APIs and actually get a lot of data points for us to make our assessment. Where typically banks may just look at very company corporate level, like your P&L, your balance sheet, your financial statements, whereas we actually look quite deeply at the transaction level, looking at things like their trade transactions that they do, their payments that they've made, the track record of those payments, and the working relationship between the buyers and the sellers of these SMEs. So yeah, I'll touch a little bit more later as well in terms of some of these avenues for where we can actually help to address some of these problems where banks typically face or struggle to actually finance these SME segments. So the other thing I wanted to mention, where we're going back to the whole genesis of like peer-to-peer lending. I think the key thing, it's a bit technical word, like financial disintermediation. So that was like the word that my university professor taught me. But what it really means is that we're just removing the middleman. So typically, if you lend through a bank, what happens is that the depositor would give their money or deposit the money into a bank. They get 2% now. Or the digibanks are like offering 3 to 4%. And then the banks actually then use the borrowers. Use the money to actually lend out to borrowers. But what peer-to-peer lending offers is that we can then just lend this money out directly, where the P2P lender would then facilitate all these transactions to actually for the investors to then invest directly to issuers. So cutting out more intermediaries and therefore giving back higher returns and higher yield to the investors. Yeah, so that's P2P in a nutshell. So moving on to some of the trends or stats that we've seen. So going back to what I mentioned earlier in the introduction, where we actually see that P2P is not new. We've been around since 2017 actually, and it's been growing quite aggressively. Where we're seeing for the last 4 years. Close to 50% year-on-year CAGR or 50% CAGR. And we've seen that in 2024, the cumulative disbursements are about like 8.5 billion, and this is across the whole industry. So 2.5 billion has been channeled to the SMEs to actually help them with their financing. And we've seen that actually even the issuer count has been growing quite big, where in 2020 we were talking about like 1,400 SMEs. Now it's all the way up to like close to 15,000 issuers or businesses, where they've seen quite good growth of like 80% for your CAGR. So we do see quite a lot of growth in these sectors, and even for us, later I'll share a slide where out of this 2.5 billion, actually we've done over like 30% market share, and actually even outperform the market when it comes to growth. So just zooming in a little bit in terms of the breakdown of like some of these P2P investment notes, or we call them like campaigns. So typically the campaign sizes tends to be more than less than 50,000 is about like 66%, and then more than 50,000 tends to be about like a third. For us in CapBay, we actually focus on the larger ticket sizes. Our ticket size on average is about like 150 to 250,000 ringgit. And that's the sweet spot for us, where our business is kind of built around serving this kind of transaction sizes. We've seen that also that over the years also it's been kind of stable, where you see it like even from 2023 to 2024, it's generally about like still that two-thirds that's still less than 50,000. And this is just based on the number of notes that's issued. And a large, more than 98% is actually still the reason why they fundraise is actually for working capital purposes. Where I think something that we've also feedback to SC is that to actually break down this working capital a bit further in terms of the use cases. So for us, a lot of our financing is actually for purposes of like supply chain finance, or essentially like invoice financing, where a lot of this financing purposes is actually to help the SMEs to actually buy more materials to produce goods, or in fact actually get their payment faster from their paymasters or like customers. Because typically there's our customers are P2P, where they would actually have invoices that would have like payment terms of like 60 to 90 days. So moving on to more stats. And by the way, these are all from the SC annual report. So I think we've just condensed it and actually made it easier for you guys. And some of these are quite interesting points, or at least for me, it's quite interesting. So the tenures that we've seen, actually about 80% is still less than 6 months. And this is the space that CapBay also operates in. Most of our notes tends to be short tenure, so then that allows that liquidity option for the investors, so they're not locked in too long. And most of our notes, of course, if it's like supply chain finance related, is what we the notes like invoice financing tends to be what is called like self-liquidating, where actually at the end of the tenure, there is like a payment that is meant to be due from future receivables or future payments that's meant to be made. So that's generally for our CapBay, tends to be shorter tenure. But we also see that more than 12 months, there's quite a chunk as well. So in CapBay also, we do have longer tenure, all the way from like 2 to 3 years, some even 4 years. But typically, those are we also have like the secondary market option that actually allows investors that's to actually liquidate their investments or sell on the secondary market to another investor, so that they can actually get back their investments rather than waiting for the end of the maturity of like 2 to 3 years. Another interesting point on the right-hand side is actually on the spread of like locations of the borrowers or issuers. They tend to be predominantly within Klang Valley. About like 50% is still Klang Valley. I think for CapBay as well, I think we've been trying to push we're seeing even Johor and Penang also are some of the large states for us as well. Because we do with digital means, we are able to kind of like finance these guys, even though we're just based in KL, but we also finance companies based in Johor, Penang, even Sarawak as well. Yeah, so this is the thing I mentioned about the our own Cat Bay numbers. So we've seen us growing 62% on a 4-year CAGR basis. Where last year we touched about like 700 over 700 million and with like close to 5,000 P2P notes or campaigns. So we are one of the leading P2P platforms, and we've seen ourselves grow in strength because we've been introducing new products to the market where SMEs can actually get financing. And interestingly, also, while this is the P2P Malaysia numbers, as a group, Catbay Group, because Catbay also operates in Singapore, Thailand, and also non-P2P. We've actually just crossed like $1 billion in terms of financing, so about 4.3 billion ringgit. So that's something that I think kudos to the team as well to actually reach and actually hit that number. When we first started out, so I think that was like a dream to actually hit $1 billion in terms of financing. And not many P2P platforms out there, even regionally, has kind of crossed that kind of milestone. Yeah. So my one final slide, I think, we also talked about the trends. I think, I guess, looking at our crystal ball or something. Some of the trends that we're seeing is that, well, firstly, both in terms of the supply and demand side, we do see an increasing demand. So I'll talk a little bit about the supply side, where the supply of like funds. So it's coming from the investors. There's actually a huge demand when it comes to private credit investments. I think you may have heard about this in the news, in articles. I think especially in the last 1-2 years where the stock market hasn't been performing that well, a lot of these companies actually resorted into going to the private credit space to actually raise money directly from investors. So this is like a form of P2P lending as well, where instead of going to the bond market and so on, you can actually go directly to the private credit investment. So it's getting more and more popularity, especially among the high net worth, because they do see it as a stable product, and even the likes of like KKR, Blackstones, and all are also quite heavy in this space of doing private credit investments. And then moving on to the demand side, so this top right quadrant. So we do see when the economy grows, there's also going to be more demand for financing as well, or like loans, and we see that there's going to be we've seen historically also it's been growing quite good. And I think as Malaysia continues to grow, there's going to be the underbanked SME segment, and this is where the P2P financing can actually come and fill that gap. And on the bottom left, I think one thing that's interesting as well, I think one thing I have to say, the government has actually helped quite a bit, or the regulator, where we've seen things like SC, Securities Commission, actually launching co-investment funds. So like MySafe was actually announced, I think, back in 2019, 2020 budget, where it's basically a co-investment fund. And the reason is that purely to actually give a bit more support to this growing industry like P2P, where they're saying that they want to encourage public investors to actually go on this journey to actually grow the P2P market. And since the MySafe launch, there's actually been another ministry that's also found that P2P industry has been doing really well. So both like the Ministry of Economic Ministry of Economy, and as well as MITI with the COSIF fund, where and another fund which is like Teraju fund, where they're actually using P2P platforms to actually channel more money to the SMEs. So going back to, I guess, the previous slide where I'm saying that we do see that the alternative industry like P2P is actually helping a lot of these a lot of these SMEs to actually get more financing. And in fact, actually, Securities Commission actually did a 5-year roadmap where they actually hope to achieve by 2028 like a 40 billion alternative financing that's going to the SMEs. And finally, the bottom right, I think it goes. I think AI is being thrown around a lot, so I think I definitely have to include it into my presentation where we do see, and even in CapBay as well, we do see AI actually transforming the industry where we're actually getting a lot more tools that's available to us to actually make things more operational efficient and actually better risk management as well, because we actually has been using AI to actually train a lot of our models through machine learning, as well as helping us to actually do much better credit underwriting, much better fraud detection, as well as much better analysis in general. So ultimately, giving a much better and sustainable financing ecosystem. So yes, I think I'll stop there. So that's just a quick introduction about P2P as well as the trends. I think we have a Q&A session towards the end of the session.
Okay, thank you so much, Daryl, for sharing with us about P2P investment landscape. So if you have any questions for our speaker, Daryl, you may write them in the Q&A box, not the chat box, write them in the Q&A box, and we'll address them shortly after the presentation of the next speaker. All right. All right, so it gives me great pleasure to introduce our next speaker from CapBay. She has over 8 years of experience in business development and sales management across financial institutions, focusing on retail clients. She's currently an investment relationship manager at CapBay, a leading supply chain finance platform that helps businesses obtain smarter financing while investors can participate in high quality financing deals. She oversees the retail segment of P2P investment. Her work at CapBay encompasses everything related to the retail segment, ranging from partnerships, investor relations, to program enhancement. So she's none other than Miss Easter Lee. So Easter, how are you today?
Yes, I'm very good, very excited to share to everyone here at Wellford.
All right, so I'll just stop sharing my screen and hand over the control to you.
All right, give me a minute. Okay. Okay, can everyone see my slide, Shane?
Yes, perfect.
Okay, great. Yeah, so thank you so much for being here tonight. And I believe just now Daryl has shared how P2P as a asset class has been performing and has been very getting more and more popular in Malaysia. So today I'll be coming in to share more about CapBay and how P2P investments work in our platform. Okay, so now let's get to know a bit about CapBay. So CapBay, we obtain our financing, P2P financing, as a regulation in May 2019. So in the photo are all our co-founders, especially at the photo on the right. And we have also launched our P2P platform on 2020. So moving on, over the past few years, of course, we have a few awards in the region, and these are the few recent ones that we are quite proud of as a company. So at the top, we can see that we have recently recognized as Fortune FinTech Innovators Asia. And the middle one is the one that we are quite proud as a company because we have been listed by CNBC as the world's top global fintech companies for 3 consecutive years. And we are the only Malaysian company, and other companies that is in this list is like Grab and Stripes as well. And the last one is the recent one is high growth companies in Asia Pacific for 2 consecutive years as well. Okay, let me share a bit about how our investments work. But before that, I'm sure all of you, when you are interested in investments, you will be interested in knowing how our returns are, right? So on the left side, just a bit of comparison. So on the orange line is where the KLCI performance is. So you can see it's going up and down. And the blue line is actually CapBay P2P. Because as you know, when you invest in stocks, the stocks are always following the market volatility and hence the orange line. But when it comes to P2P as a form of, borrowing and the lending and also paying, we are able to gauge like when is their payment, what is their return. And that's why we're able to see like a fixed return and a blue line for CapBay P2P. So on the right side of the graph, you can see the different asset classes that and how they perform over the past 3 years. You can see CapBay P2P is around 8% for 3 consecutive years. So we are maintaining our net returns at around 8%. All right, now let me give you some numbers as well. So CapBay P2P as a platform, since starting, we have funded over 2.4 billion using our platforms. And our average net return for investors is 8.1% per annum. And these are over 17,000 notes. And our default rate is at 0.7%. So for those of you who don't know what default rate is, basically it's a non-payment rate, non-payment from our issuers. And we have one of the lowest default rates among P2P platforms. And at the right side, we can see the different portfolio, the different industry that we're financing towards to. So you can see the top ones are construction and utilities and services as well. So this year we have expanded industry towards healthcare and advertising as well. So as CapBay, what we want to focus is creating different ecosystem and serving different industry as well. Okay, now let me share how our investments product works, right? So a lot of our products, one of the majority financing product we do is invoice factoring. Let me give you a very simple illustration of how invoice factoring works. So we have three parties here. One is the small businesses, the SME, and then we have a corporate buyer where we call them the paymaster, and we also have CapBay. So this SME, let's use a cleaning service company as an example. Corporate, let's use Tropicana as an example, Tropicana Group. So these small businesses, they provide their service, cleaning service to this Tropicana building. And after they finish their services, they would issue an invoice and say, hey, we completed our work, please pay us 100K. But sometimes these big corporations will take some time to make the payment. Maybe they need to wait at 2 months or 3 months. But this would become a problem for small businesses because to small businesses, cash flow is king and they need the money to pay their staff, their business operation, the electricity, everything, So what they can do is they can, instead of waiting the 2 months for the payment, they can take the invoice and submit to CapBay for a upfront payment first. So CapBay would take the invoice and submit this upfront payment to this SME. And 2 months later, when it's due time, the corporate paymaster, let's use this Tropicana, will pay this full amount to CapBay. So this is how we are able to use invoice factoring to close the cash flow gap for all these small businesses. Let me give you a real life example in CapBay. So one of our clients is KDEB. So I'm sure all of you have seen their lorries around Petaling Jaya. So how do we serve this KDEB is they have a lot of vendors, and usually it would take KDEB 1 month or 2 months to pay their vendors. But these vendors, right, they have provided their services. Instead of waiting the 1 month to collect their payment, we would do the upfront payment for these vendors. And when it's due time, KDEB will pay Cap Bay the full amount of fees. So that's how we are able to solve the issue of vendors and all these subcontractors who have served the KDEB. Now, let me share with you how, as an investor, how you can invest through Cap Bay. It's very simple. First of all, you can just use our app or the platform on the website. Let's say you put in 50K, for example. Then you can select your risk profile. We have conservative, moderate, and aggressive risk profile. So based on your selected risk profile, we will take your put your 50,000 ringgit and allocate it to as many investment notes as possible. Just for your information, investment note is one borrowing to these SMEs. So all of these notes will be under 6 months and below. And so imagine you have a portfolio of different notes with different terms. Let's say some is 1 month, some is 3 months, some is 4 months. Every time a note has matured, we will return your principal and profit into your account again and reinvest, which means we are going to using your funds to finance out to these small businesses again. And so you can imagine you have a portfolio of running investment notes helping you to generate your profits. If one day you decided to withdraw a large amount of sum from your account, you just have to turn off your auto investment and wait for the notes to mature, then you can collect the funds into your bank account. Now, let's go to the products for investors. So in Cap Bay, we have 3 different programs: Diversified, Select, and Assure. So all these are differentiated by different gradings. You can see Diversified, we have your D and E notes. Select, you have your A+ to C notes. Assure, you have your A+ notes. All of these programs will have different net returns. Of course, we say higher risk, higher returns, right? So you can see your Diversified, you are looking at your 8 to 10%, and your Select notes, you are looking at your 7 to 9%, and your Assure notes is at 4 to 6%. So net returns is after minusing all the service fees, and this is what you're collecting as an investor. I also want to share with you a bit about Assure Notes. So Assure Notes is our principal and interest protected notes, which means that in the event of default, we are going to pay our investor principal and interest based on available reserve funds. Now, so we have these 3 programs. Your risk profile will be a mix of these 3 programs. So you have your conservative, your moderate profile. You can see that conservative, you have a higher percentage of Assure notes, and then moderate, you have lower percentage of Assure notes. And then when you go to aggressive profile, it will be fully Select and Diversified notes. Of course, you can also do your custom profile. So of course, now the next question you will ask is, as an investor, right? The one thing that, because we know that every investment has a risk, and perhaps your question is, how does Cap Bay conduct our risk management, and how are we able to maintain our low default rate? So here are some of the secret sources on how we are maintaining our low default rate using our risk management. So the first one, of course, we provide high quality investment notes. There's a reason why I use Tropicana as an example previously, because we specialize in providing financing to all these vendors from very good paymasters such as the MNCs and GLCs. So yes, we also work with government-linked companies as well. And by having these high quality paymasters, we are going to that's why our investors are able to get back the funds as well. And of course, we also have our auto investment and diversification methodology. So in P2P, right, what is important is actually diversification, because you don't want to put all your, let's say, your 10,000 into 1 or 2 notes only. You want to diversify it to as many notes as possible. So just for your information, for the current auto investment, a 10,000 ringgit, we will be able to put it into around 30 different investment notes. So that is able to help you to really diversify your portfolio. And of course, we want you to have a very hassle-free experience. You don't have to look at the notes one by one. So what we can do here is we also provide auto investment to our investors. And the third one is we are a company who is very focus driven on industry. CapBay, we focus on supply chain financing, which means that we are actually facilitating the whole process of how a company from before they prepare a project to after they completed a project, we are able to facilitate and provide financing to this whole project, to this whole financing. So how we are going to do that is we want to create different ecosystem and different industries as well. So previously you have seen the pie chart where we focus on a few industries such as construction, and this year we are getting into the healthcare and advertising as well. So by focusing on industry, we're able to know how these industries work as well. And we are able to, by knowing how they work, we are also be able to get a better understanding of risk management. And of course, we have our internal credit model with proven track record. So in CapBay, we have our own proprietary credit model. What we notice in peer-to-peer investments is financing, especially is when you go to the bank, when a SME go to the bank to do financing, right? Normally the bank will look at your CTOS or your financial statements. But what we notice is, especially when we do invoice factoring, we are looking at what is the potential of the funds that will come and collected from our paymaster. So what we look at, other than the traditional CTOS and financial statements, we also want to look at data such as what is the relationship between the paymaster and the SME as well, and do they have a proven payment frequency in the past. So we are look at all these different data points for our credit internal credit model, and so far that is how one of the very strong ways that we are able to maintain our low default rate. And of course, finally, I'm sure based on all these points, you will know that CapBay is very data driven. But of course, other than all these data points, we also partner with third-party data houses to get more data. All right. Now, so how do we calculate our service fees? For CapBay P2P, it's very straightforward. We don't charge any platform fees, any withdrawal fees or deposit fees, or management fees even. The only service charge is 10 to 30% from your gross returns only, and no other charges. So let me give you an example. Let's say your service fee is at 18%. So we will take 10% minus 1.8%. So 10% is your gross, 10% per annum minus 1.8%. So for net returns, you'll be able to collect 8.2% per annum as an investor. So to wrap up for CapBay as a P2P investment platform, here are the few things that how we differentiate ourselves in the market, right? So the first one is, of course, we specialize in high quality investment notes, providing to financing for all these vendors with blue chip companies and GLCs as well. And of course, we do our auto investment, hassle-free experience, and diversification for our investors. Of course, one of the a very nice one is because we understand that for investment, liquidity is one of the important points. That's why we also provide a short tenor for our investment notes. Most of our investment notes are 6 months and below, so average is around 3 to 6 months. So it's shorter than the industry standard of 12 to 18 months. And of course, we have a very low default rate as well at 0.7% currently. And our net returns is up to 10%, so you can be able to enjoy up to 10% net returns. And CapBay Plus is an extra bonus for our investors. So Sometimes when you invest with P2P, it's all about do we have a suitable investment note for you? But before, sometimes you will have some of your funds that is not invested yet. But fear not, because we have a Cap A Plus that will give you an extra 2% per annum for your extra cash. And of course, finally, we are Securities Commission regulated. So we are very legit. Yeah, we are a legit platform. You can go to search us up at our SC website as well. All right, so let me share with you on the next steps. If you're interested in investing with us, it's very simple, just two ways. You can either download our CapBay P2P app or go to invest.capbay.com. You can just prepare your mobile phone or your webcam, your IC, and your bank account details. It will take us up to 1 to 2 working days to approve your account. Then after that, you can top up your funds via the app, either through FPX for immediate reflection or bank transfer, which will take around 1 to 2 working days for it to be reflected in your CapBay account. Our minimum starting portfolio for CapBay investment is 10,000 ringgit. And after that, you can just select your risk profile, then the investments will start running. So before I end, I would like to give some goodies for all of you who attend tonight. So thank you very much for joining us. So I would like to share a special bonus for all of you. So for all of you tonight who is interested in investing with CapBay, you can actually use this code WealthFort100 and deposit a minimum of 10,000 ringgit, start your auto invest, and we are going to give you an extra 100 ringgit into your P2P account. So this is just valid from today till 11th of September. So thank you so much but I think the webinar is not over yet because we have something special to show you as well. So I will pass the time to Shane.
All right, thanks, Easter. So we'll just play one short video testimonial from very happy clients from CapBay. If you have any question, you may write your question in the Q&A box in the meantime while we watch this video.
I'm Arvin, and for at least 9 years I was a corporate banker. Now I've joined my family business. We sell medical products for obstetricians and gynecologists. Prior to CapBay, so I've only been a very traditional investor in the past. So I only put in FDs and then properties. But then now I'm a much more diversified investor. So I have CapBay and I have exchange traded funds, and the list goes on. Actually, it's a very funny story. Many years ago, when I still was in banking, I was approached by my recruiter about this new and upcoming startup that was doing peer-to-peer lending. So I just started reading a lot about them, and I just invested in CapBay. That's how I got to know about CapBay. So my experience with CapBay has been very good. The main plus point is your customer service is damn good. I think the real success story is how the compounded returns, compounded profit from CapBay, and then you can see how your compounded profit will be able to earn compounded returns, and then you can really grow from there. So I've seen my own personal investment in CapBay grow by leaps and bounds because of the compounded returns. I've always been a very big fan of CapBay. I think now probably I have 5 or 6 at least people who have already signed up using the referral program. The reason why I would recommend people is because I always believe that whatever you invest in, you really have to understand what it is. And from the first day I was introduced to CapBay and I read up about it, and until today, the underlying concept of what you all are planning to do, what you all want to do, is really resonates with me. It's something I really can understand, and I'm able to easily explain it to other people as well. Once you have already saved up your 6 months of your emergency funds, it's really worth it to look into CapBay to invest into a P2P platform. The returns are very stable. The default rates are extremely low, so which makes your net returns very good. And then your customer service is really good as well from CapBay. So I really recommend people to look into CapBay.
All right. So good to hear from him about his investment experience with CapBay. So if any question, you may write them at the Q&A box. We will begin the Q&A session right now. All right. So let me see. So the first question I have on my screen is asked by Tian Kyung. Okay. May I know what is the minimum amount to lend per note? Maybe I post this question to Easter.
Yes, so our minimum deposit per portfolio is 10,000 ringgit, but our auto invest will invest minimum 100 ringgit per note.
Okay. So is there any minimum allocations to it? I mean, like every $10,000, I would have diversified across like 100 notes.
Yes, so 10,000 ringgit currently we are seeing around 30 to 40 different investment notes.
Wow.
Mm.
Across different sector, right?
Yes,
Oh,
yeah, it
that's
can be same, it can be different, yeah, but it's around 30 to 40 different notes.
okay. That is pretty diversified.
Mm.
So the next question by Joshua is, could you disclose some examples of the MNC and GLC that you're currently involved or have been involved with?
Sure. Maybe I can take that one.
Oh, yes,
So I
Derek.
think this, yeah, can hear, yeah. I was worried I was on mute. But yeah, so essentially, and this has also been disclosed in our newsroom. We have quite a number of partnerships with like GLCs. I think back in 2020 or 2021, we were one of the few appointed by Telecom Malaysia TM to be one of the fintech partners to actually execute the vendor financing programs. So that's one of the GLCs. We also work quite closely with some of the state, Selangor state GLCs. But that's why I think just previously Easter shared like PDB, waste management. We also work together with like IS Selangor, UEM Agenta, KSSB, Worldwide Holdings, even Petronas are some of the entities that we work quite closely. And interestingly, also, it's not just GLCs. We actually work quite extensively with government agencies as well. So things like MOF, Ministry of Health, Ministry of JKR, the Ministry of Works as well. So these are some of the government ministries or agencies that we work with as well, where ultimately the paymasters are government backed. So these are, pretty much, if you trust the Malaysian government, where it's kind of zero risk, then ultimately it's no longer just a credit risk, but it's also a risk on identifying to ensure that these invoices are legitimate, and work has done, things like that. So these are also some of the steps that we do to actually ensure that ultimately these notes will get repaid.
All right. Thanks, Darren, for clarification. So the next question is asked by Lim. I think we'll post this to Easter. So in what circumstances do you charge 10% service fee or 30% service fee?
Yeah, thanks for the question. So all of our how we charge is based on the risk grading. So let's say, for example, our A plus notes will we charge around 30%. And then let's say our D and E notes we will charge 18%. So the higher risk, let's say lower grading, we will charge less service fee.
So the more secured note will command a higher service fee lah.
Yes.
Okay, because you also provide capital guarantee, right?
Yes.
Okay.
Based on available reserve funds.
Based on
Yeah.
condition upon the reserve fund. Yes,
Yes.
that's right. Okay. So the next question is asked by Yok Beng. So which industry has the highest default rate?
Maybe I can take that one. So, in terms of default, actually, I wouldn't say that it is kind of like reflective of the whole sector because it's not really kind of like idiosyncratic because we don't have that many default. I think it's like a handful of like probably 10 like dozens only. So I wouldn't say that that reflects quite poorly in terms of the whole sector itself. A lot of the defaults that we've seen is actually really the performance of the SME itself. So I wouldn't say it's like a sector-wide case. But naturally, because we are quite focused on, I think previously Easter shared our breakdown of sectors. Construction, manufacturing, and all, and services are some of the sectors that we are quite big in. So that's why you also see that these sectors are the ones that are higher in default. But having said that, I think just wanted to re-emphasize what Easter mentioned earlier, where through our auto invest, we are able to then help invest on your behalf because I think one tip that I typically give our investors is that not to kind of overthink the investment because really even for us also as much as we do our risk grading and our checks and all it's not necessarily the case where even the rated A can have like lower defaults and all because it really depends on each of the issuers also. So my suggestion is really to just choose your preference in terms of your risk profile and then let the auto invest actually do the work in terms of investing on your behalf. Rather than kind of like manually investing into each and every note by like reading all of the investment memos and so on.
Yeah, I think I kind of like the auto invest feature because it enables us to immediately diversify our risk away
Mm.
from one single node. Because if we like all in one single node, then we have, if the node goes sour, then all our investment, will go down the drain, right? So I'm kind of impressed with the auto invest function where it immediately helps us to diversify the risk across like 30 to 40 nodes, even with just like 10,000 ringgit kind of minimum investment. So the next question asked by Yok Beng is the returns of the P2 investment will it be paid in the interest payment? Is it subject to personal income tax bracket? If it is in the form of dividend, is it part of the dividend tax newly introduced by government from taxation year 2025?
Yeah, maybe I can take that one. So, in P2P investment is considered a form of interest payment. So then it would be classified under the personal income tax. I think there would be a section under if you receive interest, rent, and so on. So it'll be parked under that category. It is not a form of dividend payment. Yeah.
Okay, so it is subject to our income, lah, correct?
Yes.
All right. So it won't be imposed with the dividend tax, but it is part of the personal income tax. The next question is asked by Key. Let's say a person invests 10,000 ringgit at Cabe 1 year ago. How much will it get today? Maybe Easter?
Okay, yeah, I can answer that. Yeah, so first of all, because we are auto invest, right? So it also depending on how we of course we have a range of how much return you will get. And so it really depends on the risk profile that you've chosen. For example, is it a moderate profile, or aggressive profile? But so far, what we have been seeing is it's around 7 to 9%. So that is aggressive profile. So for moderate will be around 6 to 8% per annum.
Okay, that's
I
net
think
return, right?
yes, net of all fees. I think just now also Easter, your slides also mentioned the comparison, the 1 year comparison, right, across different asset classes. I think that's something like 8.3, 8.4% last year, if I recall correctly. Yeah, yeah. So, 10,000 ringgit, you get 800 ringgit, 830 ringgit.
All right. So the next question is by Vision. Is AI being used for auto investing in Cabe? Maybe Daryl?
Yes. Yeah, sure. Yeah, I can take. Yes, we actually do. When we first, okay, maybe I can give a little bit of like flavor in terms of how we actually run the auto invest. So we actually do use machine learning for this, and originally it was like an Excel template, but over time we actually automated it and actually put it into our platform. Where ultimately the two main objectives is to actually maximize diversification and actually maximize utilization as well. What I mean by that is that because and it's kind of like always competing with each other, right? If you want maximum diversification, sometimes that means that your utilization may be quite low. Meaning to say, because if I want to put like 2% for each note, I need like 50 notes. But what if the availability of the notes is not quite there, because we also are investing other people's money as well, as in like all the other investors. So it's kind of like a dynamic system as well, where we actually monitor and actually tweak the parameters based on how we're seeing the utilization and the diversification of the nodes. And it's also quite not complex, but like well, I guess sophisticated enough to actually look at quite a few of your preference as well. Be it I think like what Issa mentioned before, whether you put aggressive, um, conservative, and so on. It actually does take into account those factors. It also takes into account your current exposure to the issuer. What I mean by that is that because sometimes our issuer can have like multiple notes per month. Because they have like multiple invoices from like different paymasters. So our auto invest actually incorporates risk mitigation such that you are not overly exposed to that issuer as well. So even though they may have like 12 notes per month, we may only invest up to, say like 8 or 9 once it hits that diversification criteria. So yes, we do use a lot of like AI, and I think this is something that's quite dynamic as well, that we are constantly improving depending on some of the new features. I think we've also shared to some of our investors. I think there's a new development for our auto invest feature as well, where we're giving more flexibility to the investors.
All right. Thanks, Daryl. The next question is by Ui. He has some not so pleasant experience with, I think, another P2P firm, I guess. So the investor company is having issue to fulfill the payment, and it is in almost chapter 11. So as an investor, what can we do?
Hmm. Maybe can I clarify that iPivot is actually an equity crowdfunding. When SE gave the license, there's actually two different categories. One is like the debt side, so like loans and all. So that's their P2P lending. And then equity side, which is a separate kind of form of fundraising, but still within the RMO or registered market operators P2P landscape. That is under ECF. And iPivot is considered an equity crowdfunder, where you're essentially becoming a shareholder of the company. So in that case, I don't know yeah, what other recourse is available. Because as an equity investor, I suppose you would need to also check with the platform provider also some of the availability. Because ultimately, as a shareholder of the company, then you want to see what kind of tools that is kind of available, in the sense that like whether they have like general meetings that you can raise your concerns as a shareholder and kind of like vote on whether what steps should be taken for the company.
Okay. So let's put these circumstances into your landscape, right? So let's say if this default happens to any of your investment node, right? So what can investor do?
Mm,
Or
mm.
what would CapBay do to salvage investors' fund?
Yes. So for us, so I think something that is important to also inform is that defaults do happen. That's part and parcel of P2P investing. But for us, we actually take it very seriously, where we actually go for all the recovery efforts And this is actually done part of like P2P operators' obligation to actually chase for the investors' money, where we actually will send legal letters. We'll actually try and see whether we can negotiate or talk to the issuers to see what kind of like repayment cycles they can do, and also see whether there are other avenues for recovery purposes. In fact, actually, we have quite a big team and strong team where we have actually seen our recovery efforts to be about like 80 to 90% of like the defaults that we've actually recovered back. I think it's not just our recovery team, but I think it goes back to the underwriting part as well, where we typically don't give like a general loan where we actually tie it to like trade transactions. So that would mean that, for example, like invoice financing, the money is like from paymaster like government or like GLCs. Then we also then talk to the government GLCs to actually ensure that the money is paid to on behalf of the issuer. So these are some of the steps that we take.
Thanks, Daryl, for the clarification. So the next question is by Tian Kyong. Can I choose the notes to invest instead of auto investment? Maybe Easter?
Yes, you can choose the notes that you want to invest. So there is actually a manual invest button for all of our notes, but we would prioritize the auto invest crowd first. Yeah, but with that being said, we would still encourage our investors to do auto invest, and on top of that, they can also do manual invest. The reason for that is because P2P, like I shared previously, it's all about diversification of portfolio. And most of our notes have very short tenor. So if you want to do manual investing, it might take a lot of effort from your side. Yeah, that's why we encourage auto investment, especially where we have already do the due diligence for our investors previously.
So when you say prioritize auto investment, you means where the notes is available, your algo will automatically match those with to those investor with auto invest function. And so if you are not early to subscribe, then maybe within the 1 day, then all the notes will be fully subscribed. Am I right?
Yes.
Yeah. I think maybe just a bit more context to that. I think for us, it's like a balance that we're playing for being a platform. Because on the one hand, we have like SLAs with the borrower or the issuer because they want their money as soon as you can. So that's why typically our investment period is not very long. Within a day or within an hour or so after launching, it would typically be filled. So that's why there's not that much time for investing manually. So that's why we encourage like auto invest instead.
I see. All right. That is very good to know. The next question is by Yok Beng. Will CapBay invest the raised P2P fund overseas or just within Malaysia?
Maybe I can take that one. So specifically for our P2P license in Malaysia, it only allows us to invest into Malaysian companies. But we have operations in other countries like Singapore and Thailand as well. Yeah. So, but for the P2P platform in Malaysia, it's only for Malaysia. Yeah. Then if you're interested in Singapore and Thailand, I think that will be a separate kind of conversation.
Oh, so that will be regulated in like by NAS lah in Singapore, right?
Yes, MES and SEC Thailand. Yeah.
Okay, I see. Yep. So, yeah, you can explore overseas with CapBay Singapore, CapBay Thailand. All right. So, if any other question, you may write them at the Q&A box. I think this is a very rare opportunity to ask, Daryl questions. So, Daryl, just now you mentioned that your recovery team is able to get back like 80% of the default notes, right? Oh, that's pretty amazing. So how fast can they get back? Can investor get back all this money?
Yeah, so it really depends on each node itself. So sometimes it is really a case where like the paymaster drags a bit longer. So even governments also, we also see some paymaster dragging because, for example, for that quarter, if let's say they run out of budget, they actually wait for the next quarter. And if you wait for the next quarter, that would mean that you would have already extended by 90 days, not just because one quarter, right? So sometimes it right after the 90 days or so, we have seen like, after default, but like, 5, 10 days later, we've seen the note amount being recovered as well. So it is really a case by case basis. And yeah, it could be as soon as like 1 week, or it could actually stretch to like a couple of months as well.
All right. So let's say the company has 10 notes with you and they defaulted on 2 notes, right? So what would you do with that company?
Oh, one company have 10 notes and then 2 default. So we will typically call on the cross default also. So we'll then ensure that the full amount is actually recovered, whatever is outstanding. Yeah. So
Mm,
we have in our agreements, we actually have a legal clause to actually call on the cross default so that we can recover our other notes that have been disbursed also, rather than
mm.
waiting for it to mature.
All right. So the next question is between Malaysia P2P and Singapore P2P, is there a big difference in terms of returns to investors?
Yeah, actually, our returns are about roughly the same. I think, yeah, not that much, just that one's in Sing dollars and one's in ringgit. Yeah, it's not 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 too different.
Yeah, not too different. All right. Okay. So looks like um n- no more questions on my panel. So maybe any closing remarks from Easter or Daryl?
Well, nothing much from me. I guess just to can try out CapBay P2P if you're interested, because we will be offering a promo code for you for this 2 weeks.
Yes, just enter Wealthfort 100 is uppercase, okay? And you will get 100 ringgit credit when you make your first deposit, right? So let's say you just want to try out, want to test out the platform, you can just deposit minimum 10K first. Then 100 ringgit of 10K is 1% already, right?
Yes.
All right. So then you get an experience, see how it works, right? For maybe first 3 to 6 months. Then if it builds the confidence with you, then you can increase the size of allocation into CapBay, right? That's how we can diversify your equity portfolio into that market, right? That capital market. Okay. Daryl, anything to share?
Yeah. Maybe I'll just quickly answer the two questions that
Oh yeah,
just
there are two
popped
more
up.
questions here. Okay.
Yeah.
So will
So
CapBay take the
yes,
defaulter to court? That's the next question.
yes. That's an unequivocal yes. We have done that in the past, and we've actually won many of the court cases as well. Where we've actually got like injunctions for them to actually repay. We've also take like some of the personal guarantors also to court to also call on to their personal guarantees. So that's something that we've actually typically absorbed the legal costs first to ensure that the money is recovered. In fact, I think one thing to also highlight as well is that Cabby actually has quite a bit of skin in the game where we actually invest alongside with the investors, and that's one of the reasons why we are actually incentivized or interest aligned to actually get the all these defaulters to actually repay back.
All right. So Jimmy would like to ask any minimum period for investment?
Yeah. So minimum typically our notes are about like 3 months worth. So that is typically the minimum period lah. So it depends on the tenure of the investment note. But we do encourage to actually see like at least like 6 to 12 months. And the thing is that because on the app as well, we actually have like um in the dashboard you will see your returns. But because we measure it on cash basis, so like if you don't see the full cycle, and at the start, the first few months, you actually see quite low returns. That's why we encourage to actually leave it there, run the auto invest and let it reinvest. And then within like 6 to 12 months, actually you see the returns coming in once it gets repaid. Yeah.
All right.
Then
So yeah, the next question is who are the competitors to you?
Yeah, so for P2P investing, so I mean, well, for P2P, when it comes to the issuers, right? I think there are banks that actually helps to finance this. But in our space also there are like factoring companies and so on. So those are some of the competitors to like P2P when it comes to financing. When it comes to investing, I would say yeah, there are other P2P players out there. I think all the different P2P players have like different kind of business models or like risk appetite. Some actually do more like longer tenure, like 2 to 3 years, and smaller ticket sizes, less than 200,000. And then some also just like microfinancing, less than 50,000. So I think SCE has been quite good in terms of like distributing the licensees to actually cover different aspects of like the SME funding side. Yeah.
All right. Thanks for clarification. All right. So maybe we just do 1 more minute, right? Any other questions? Oh yes. Okay. The next question is how CapBay handles bad debts.
Yeah, yeah. So I think previously we also talked a little bit about it where we do have quite a big recovery team. It's actually done primarily in-house, where we actually would firstly there will be like automated email reminders that's actually being sent to the borrower as well as the paymaster to actually remind them that there's this outstanding invoice that's due in like 7 days. And then post that also there will be automated like email traces, and then within like 20 to 30 days, then there's an SOP that we follow where we'll start engaging the borrower to actually check the payments. If let's say it turns sour or they're unresponsive, then we actually issue letter of demands to the issuer. And if those are not settled, then we actually take them to court where there would actually be a court process depending on the financing amount. Different, the higher, then you go to like high court and so on. But like sometimes it just goes to like the lower level courts depending on the amount. And then these will then also be they are paid. We will hire lawyers to actually recoup these money.
Thanks, Daryl, for clarification. Okay. Looks like everybody is clear. Okay, but if you still have further question, after you check CapBay out, you may still reach out to the CapBay team at investor@capbay.com, email them, or you can call them at 018-7777 000. Okay, 47 and 000. Okay, yeah, you can always reach out to them to get your questions addressed.
Yeah, yeah, yeah. And I do encourage you also to like drop your lead as well. Then we can send like emails for you to more materials. And then once you're ready to sign up, then you can use the WealthPort code as well.
Yep. So if you use a wealth code which is valid until 11 September, which is 2 weeks from now, you'll get additional 100 gig credit on your first deposit with CapBank. Okay, so the code here is WealthPort100. Okay, this is as a special thank you to all the attendees who make your time out of the busy schedule to be with us today to learn about P2P investing. All right. So with that, I want to thank all of you here for tuning into this webinar to learn about P2P lending, P2P financing, how it can help you to get your desired return to meet your investment objective. So thank you everybody, and hope you can consider to invest with CapBay if you feel that this can complement your portfolio to give a stable return to you through steady income streams. Right. With that, thank you everybody, and thanks Easter and thanks Daryl for sharing us about P2P investing and sharing us about CapBay. Bye bye.
Thanks, everyone.